Hello again, Massachusetts home buyers and sellers. My name is Dan Bernal. I'm a realtor here on the North Shore, and thanks for checking out my video blog where I like to talk about what's really going on down here in the trenches of the Eastern Mass housing market. Today I want to talk about, in light of this past weekend's Memorial Day holiday, veterans loans. Obviously, we have a tremendous number of both active and returning servicemen and women who are soon going to want to exercise their right to a veterans loan, a VA loan, which is a great program. It's a no money down loan, which also allows sellers to contribute a certain percentage of the sale price to the buyer, the veteran's, closing costs. Now, this is a little dance we in the industry are used to doing. We do it a lot with FHA loans in Massachusetts with the mass housing program. Basically, any low down payment program. When you know people aren't going to necessarily have the money out of pocket to pay their closing costs, we've come up with this little routine for rolling it into your financing, to your mortgage, without directly borrowing specifically for the purpose of paying closing costs. And here's how this works. Okay, so let's say you're working with your buyer agent, you find a property, hopefully your buyer agent has done a VA loan before and will understand the property requirements thereabouts. We'll discuss that in a minute. There are a bunch of restrictions on what you can buy with a VA loan. But let's say you find a good candidate home. You're going to go to your loan officer, your mortgage advisor, and ask for what's called a good faith estimate of your closing costs. Now, this is basically a ballpark of what you can expect to need at the closing table in order to pay off your lender for the various fees and prepaid escrow accounts they need to set up for you to service your loan to get you into a mortgage into this property. Okay, so let's say you wanted to pay $250,000 for a particular home. We go to your loan officer. They give you a good faith estimate of about $6,000 for your closing costs. What we're going to do is we're going to write up an offer for you of $256,000 for the property with a contingency built in that the seller is going to credit you $6,000 towards the buyer's closing costs and prepaids at the closing. All right, so essentially your lender understands that you really only wanted to pay $250,000 for this property, and you're asking them for $256,000 to give to the seller with the proviso that the seller is going to give you back $6,000 towards your closing costs. Why would they be okay with that? All right, well, here's how it works. As long as the appraisal that they order and you pay for, it's one of your closing costs, supports the value of $256,000 as the market value for the property. So as long as the appraisal comes in at or above $256,000, they now can lend you this money and have one collateral, the home, against one chunk of money, the $256,000, as their protection. So essentially, it doesn't matter to them. As long as the house is worth $256,000, that's their collateral. You don't pay back any dime of that. They're going to take the house from you as a foreclosure and sell it to get their money back. So they're allowing this because A, it lets a lot of people who wouldn't otherwise be able to buy a home, and B, especially if you're a veteran, you've been off somewhere protecting our country, you may not have had exactly the spare time to stash money away for closing costs. This way, with no down payment on the loan and basically your closing costs rolled into your mortgage, with very little money out of pocket, you as a veteran can buy a home. God knows you deserve it. Okay, one other thing you need to understand, property restrictions with respect to a veteran's loan. And this is sometimes a little ironic to me. Veterans who are often the most capable people on the planet for doing a little fix-it work, maybe build some sweat equity and fix up a broken down home, cannot buy a broken down home with a veteran's loan. Unfortunately, a veteran's loan is very, very strict with respect to property condition. You need to have a home that's in pretty good shape to buy it with a veteran's loan. This is a protection for the veterans. The government doesn't want to have you use their money to buy something that's going to be dangerous to you, but it also restricts you using your ability to fix something up on one of these. If you are interested in fixer-upper kind of properties, there's a different program that's offered through the FHA. It's called a 203K rehab loan. And we'll talk about that in another blog. But basically, any beat-up property is not going to qualify, and most condominiums are not going to qualify. There is a way to find out if a condominium association has been pre-approved by the Department of Veterans Affairs for a VA loan. And the way to look that up is go into Google and search VA approved condominium list. And fairly high in the search page, you're going to get a link to a little search engine that allows you to search by city, state, and I believe county for all approved condo associations. And basically, if it's not on that list, if you see a condo you like and the association it's in is not on that list, you just can't use a veteran's loan for it. Pretty much most loan officers I know just say if you're looking to use a veteran's loan, you really shouldn't be considering condominiums. So pretty much you're looking for a single family or multifamily home. We can talk more about that in the future, but you can always reach me at virtualhomes.com, or you can email me directly, dan.bernal, that's B-E-R-N-A-L, at virtualhomes.com. And I'll see you next time.